Now that we have looked into the basic rules of accounting, let's try to solve a problem with common business transactions. The first adjustment in this problem is Anil started business with cash of rupees 6 lakhs. Is this a transaction which is of financial in nature? That is the first thing which we need to identify before we proceed towards generalizing the same. In this case it is yes, because Anil is bringing in cash of rupees 6 lakhs as his investment or as his capital. Now there are two elements in this transaction. The first one is cash, second one is capital. Cash is an asset to the business, and the asset rule says if there is any increase in asset, it shall be debited. Before he brought in cash of rupees 6 lakhs, the cash in the business was 0, and now it has increased to 6 lakhs. Likewise, there is a liability aspect as well. The amount which he has brought in as capital, that is rupees 6 lakhs, is liability to the firm, because the firm at some point of time in future has to return that much amount to Anil. Liability which was 0 earlier has now increased to rupees 6 lakhs. Therefore, as the liability rule says, if there is any increase in liability, the same shall be credited. The journal entry in this case would be debit increase in asset, that is cash, and credit increase in liability, that is capital. The next transaction is he purchased goods for cash rupees 2,50,000 from Sunil. There are two elements here, purchases and cash. When we purchase goods with an intention to resell it, then that particular item becomes business expenditure. The other aspect of this transaction is cash. Whereas our purchases is increasing, the cash in the business is decreasing. The expenditure in this case is increasing and the asset is decreasing to the business. Therefore, according to expense rule, we have to debit if there is any increase in expenditure. Therefore, we will debit purchase of goods and credit if there is any decrease in asset. Since cash, the asset is decreasing, we will credit cash. The third adjustment is sale of goods for cash of rupees 20,000. When business sells goods to its customers, it becomes its income. Before this particular transaction, the total income was 0. And now because of this transaction, the income has increased by rupees 20,000. And the income rule says if there is any increase in the income, it should be credited. Likewise, by selling goods worth rupees 20,000, the business has received cash. Therefore, the cash position has increased by rupees 20,000. Therefore, the journal entry in this case would be debit increase in asset, that is cash, and credit increase in income, that is sale of goods. The next adjustment is purchase of goods from Bansal for cash of rupees 18,000. The elements involved here are purchases and cash. Purchases has now increased by rupees 18,000. Purchase, as we know, is an expenditure. Cash, as we know, is an asset. And cash has decreased by rupees 18,000. Therefore, in this instance, purchase, which is our expenditure, is increasing by 18,000, and cash, which is our asset, is decreasing by 18,000. And the expense rule says if there is any increase in expenditure, debit it. And the asset rule says if there is any decrease in the asset, credit it. Therefore, the journal entry in this case would be debit purchases and credit cash. The next transaction is sale of goods to Charles on credit for rupees 80,000. The elements involved in this transaction are sale of goods and the debtor Charles. In this case, we have not received cash from our buyer, but instead we have sold goods on credit, meaning the person who has purchased goods from us will pay the amount at a later point of time. Since he is a debtor or the person who owes us money, Charles will be an asset to the business. And sales, we have already discussed, is an income to the business. In this case, both the income as well as asset are increasing to the business. Therefore, according to income rule, anything which increases with regard to income shall be credited. And the asset rule says if there is any increase in asset, debit it. Therefore, debit Charles account and credit sale of goods account. The next transaction is purchase of furniture for rupees 16,000. The two elements of this transaction are furniture and cash. Since nothing is mentioned in the problem, it is assumed that the furniture was purchased by paying cash. Furniture is purchased for the sake of office use. It is not regular business goods. The intention here is to use it for a longer period. Therefore, furniture becomes our fixed asset. The other aspect of the transaction is cash. In this case, both the aspects of the transaction belong to the same category, that is asset. One asset, that is furniture, is increasing to the business, whereas the other one, cash, is decreasing to the business. Therefore, applying the asset rule, we will have to debit the asset which is increasing to the business and credit the asset which is decreasing to the business. The next adjustment is payment of rent of rupees 4,500. The two aspects of this transaction are rent and cash. Rent is a regular business expenditure, something which the business incurs perhaps every month, and cash, as we have already seen, is an asset. According to expense rule, if there is any increase in expenditure, it should be debited. Therefore, we will debit rent. And cash, as we already know, is decreasing. Therefore, we will credit the decrease in asset. The next transaction is that of payment of wages by cash. The two aspects of this transaction are wages and cash. Wages is a regular business expenditure which is usually paid for workers or laborers, and since it is an expenditure which is increasing, the same shall be debited. And cash is an asset which is decreasing, therefore we will credit cash. The entry would be debit wages and credit cash. The next transaction is also that of purchase of goods, but in this case it is credit purchase, meaning we are not making any payment of cash, but instead purchasing the goods from our vendor Ajit. The two aspects therefore are, one is purchases, which is our business expenditure, and other being Ajit's account, which in this case would be a liability or sundry creditor. At some point of time in future, we will have to clear the dues owed to Ajit. Therefore, the liability is increasing in this transaction. The entry would be debit purchase of goods, since expenditure is increasing, and credit Ajit's account, because liability is also increasing in this case. Dividend received. In this case, dividend has been received by way of cash or bank, usually by way of bank entry. In this adjustment, we have received dividend, usually by way of bank adjustment. The two aspects therefore would be dividend, which is an income to the business. Dividend is usually received on investment in some company, investment by way of shares. The organization has invested in the shares of some company, perhaps, and it has received the dividend on such investment. Income is increasing, that is dividend. Likewise, asset is also increasing, which could be either cash or bank. Therefore, applying the rules of asset and income, the entry would be debit cash or bank, increase in asset, and credit increase in income, dividend. The last transaction, salary outstanding being rupees 6,500. Let's assume it's the last day of the month and the salary has accrued on that date, meaning you have incurred the expenditure but have not yet paid the money to your employees. Therefore, the two aspects of this transaction are, one is salary, which is a regular business expenditure, and other being outstanding salary, that is a liability to the business. The reason why it is a liability is, though we have incurred the expenditure, the business has not yet paid the money owed to the employees. Therefore, in this case, both the expense, that is salary, and the liability, which is outstanding salary, have increased. Applying the rules of expenditure and liability, the journal entry would be debit salary, because it is increase in expenditure, and credit outstanding salary, because it is increase in liability.